Warning, warning, warning. If you're watching this video, you're extremely early to cryptocurrency and you do not even understand how early it is to be involved in this asset class. It's a great time to be alive. To be specific, the math says that in cryptocurrency, the market cap size is less than 1% of the total market cap size of the stock market. And we know, you should know by now, that cryptocurrencies are much more than investment vehicles. I want you to know this. The technology is guaranteed to be adopted. Information systems, the internet, it's considered Web 3.0, not 2.0, meaning an upgrade. User interface, all privacy on the internet, data transfer, value transfer. Pretty much every measurable value on the internet will be transacted on the blockchain. And I'm here to bring you some very good news. Very good news. There's a lot of uncertainty in the market. There's a lot of people going this way, a lot of people going that way, a lot of people bullish, a lot of people bearish, a lot of people not knowing what to do. But I'm here to tell you that the market is bullish. I'm just gonna say it, and I'm gonna prove it with data, a lot of data. In this video, I'm gonna go over the entire cryptocurrency market and show you everything when it comes to the medium and the long term in cryptocurrency asset prices. And trust me, I have a lot of conviction. I put 50% of everything I have into a low market cap, under $100 million market cap altcoin, high risk. I took on a lot of risk. You know, I went to sleep last night and I'm like, look, I gotta come up with a really good reason why this is bullish. I have to look at the smartest people when it comes to the bearish side. I've looked at very, very smart people on the bear side, and I have to look at their arguments and I have to make sure, I have to really make sure, and that's what this video is here today. What's going on, everybody? Alex back with another cryptocurrency video, and I'm going to dissect the cryptocurrency market so that you guys can have confidence with your investments. And trust me, we are early on the short term, the long term, the medium term. If you're in this market, you are part of the 1%. You are developing a skill that nobody else has in the world. And I want you to pat yourself on the back. And I also want to say, I just want to give gratitude to my entire audience. Thank you for being here through the entire bear market, working with me, sticking with me thick and thin, pushing through and just getting money, man. Let's get money together. Subscribe to the channel, like the video, and share it with a friend. Now, I have this chart, okay? This chart's pretty crazy. I'm excited about it. That's why I'm screaming on the microphone. This is the S&P 500. This chart is color-coded with the S&P 500. If I take this off, this is the S&P 500. Now, if you understand what the S&P 500 is, I'm going to say it again. I say it in a lot of videos, but for newer people, this is an index of all the stocks. So if I Google search S&P 500 holdings, you can see that all these companies, Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, all these companies make up the S&P 500. It's an index. It's essentially like saying if you have 500 different stock companies and there was one number that was averaged out on all the stock companies, what would that number be? That is the SPX. Now, the beauty of the SPX is that I use it to calculate the direction of all risk on assets. As you look at this company list here, a lot of these are riskier assets. They're considered risk on. A risk off asset is like, for example, gold or commodities like wheat, things of that nature, things that we know hold value. Even if the price doesn't go up, people still need wheat. They're always gonna need wheat, right? So that's a commodity. These are risk on assets. Microsoft, Apple, right? These are tech companies that are riskier in the grand scheme of things. They hold more risk. So they go up by larger percentages and they go down by larger percentages as well. So Bitcoin and cryptocurrencies are a form of risk on asset. But the thing about the S&P 500 is that look at how far it goes. It goes all the way back to 1938, 1927. So the beauty of this is that we can analyze it and get bigger data set. We have a bigger data set to analyze. Bitcoin's only been out since like what, 2009, 2008, depending on what chart you're looking at. It's been out for a fraction of the time of the S&P 500. So I color coded this chart. Now, I want everybody to know about this chart because I've been spamming it. I've been using it so much. It's called the Federal Reserve Playbook. I give access to this chart to the people in CoinPix Inner Circle. If you want to take advantage of the 50% discount on my trading group and all of the information I've ever gotten in the past 8 years of being in cryptocurrency, all of my buy and sell calls, everything, head on over to coinpixinnercircle.com. The link will be in the pinned comment below. Take advantage of the 50% discount before it's over. But in this chart, I want to break it down. I want to break it down even deeper, because we're looking at the S&P 500. But cryptocurrencies are different. They don't exactly follow the S&P 500. So I actually took the same color coding and I put it on Ethereum. And it got very interesting. And towards the end of the video, I actually have a breakdown where I look at conditions of the market, right, that we're in right now, and I compare it to what stocks were doing in a dot-com bubble, because we don't have price history when interest rates were high. There's only been a couple of times where interest rates have 5%, which is where we're currently at right now. Interest rates from the Federal Reserve are currently at 5%, 5.25 or 5.25, or whatever the case is. It's near 5%. And there's only been a couple of times in the history of all assets where we've had those type of interest rates. So I want to analyze the conditions around those interest rates to see if we can have risk on assets. What do they do? Do they go up in price, down in price? And I found an almost identical scenario back in 2006, 2007, which is funny because this is right before the housing market crash in 2008, which I expect to come soon as well. I believe there's going to be a big crash. I don't know exactly when, but I believe there's going to be a big crash. And it lines up almost identical, but I want to show you Ethereum first. So first chart, if we look at it, there's a couple things you guys want to know. Take notes if you want to. The green is when they increase interest rates or they make it harder to borrow money. So for example, if your friend loans you $100 at 8% interest, you're less likely to take that loan versus another friend that's loaning it to you for 1% interest. Why? Because it's 1% versus 8%. Right now, interest rates are high because, as you can see in the green, this green right here is a whole period for almost, a year and some change where they've been increasing it. So the friend's like, yo, interest rates are going up, interest rates are going up, interest rates are going up. Now, the reason why they increase interest rates is because they're trying to stop inflation. Inflation right now is at about 6, 7%. I don't know the exact number, but inflation's pretty high, meaning the cost per goods are going up. The cost of everything is going up. We've officially lost this year 7% of all the money we've gotten on our paychecks. So if you make $50K a year, you lost 7% of that $50K just by the simple fact of the Federal Reserve System that we have no control over. So they're trying to stop that, right? So they're like, okay, we're going to stop inflation and we're going to increase interest rates. That is what that green is there. The green is them increasing it. Now the red, exact opposite. They're decreasing it. So then now your friends are like, oh, okay, I'm going to lower the interest on this loan so that you're more likely to take the loan. It's the same thing. Red, they lower it. But when they lower it, it increases inflation. Think about it. What is inflation? Inflation is how much money is out in the circulation of the system, right? So if there's a whole bunch of money out there and it's diluted, right? That's because interest rates are low and people are just taking out more loans. People are taking out more loans. People are taking out more loans. People are borrowing more money, right? So this is the dynamic that happens. If they print money, if they dropped the interest rate and they print money, then inflation goes up. If they do the opposite, right? If they decrease the amount of money that goes into the system by increasing interest rates, then it goes down. The actual inflation goes down. And that's not necessarily true for stock prices. As you can see, there's been periods where there's, green, right? Which is what you would expect the market to go down. There's been periods where there's green, right? As you can see right here, and the stock price goes up. And that's because we live in a modern day Ponzi scheme, and that's a whole nother video. But long story short, green is when they increase interest rates. Red is when they decrease interest rates. Yellow is when they keep it the same. So if you see yellow, that's when they just didn't do anything, which is pretty much exactly what they did in the FOMC meeting 2 days ago, which today is the 22nd. Yeah, 2 days ago. 2 days ago, they just kept it the same. They didn't do nothing. Okay. Now the whites are when they didn't do nothing. It's not really white. It's like a light yellow. It's when they didn't do anything, but they kept interest rates at 0 to 0.25. They kept it at the lowest they possibly can. So this is like a special event. That's why I made it white. Now, I've talked about it in other videos. You can go watch the other ones where I showed you guys specifically this time period here where we have increasing interest rates, the green, right? They're increasing interest rates. And then we have a period of them trying to pause, right? So increasing interest rates, pause. Like you can see right here, the entire market goes up in value, right? Same thing here. They increase interest rates and then they pause, right? And the entire market is still going up in value. These are large percentages, right? This is big time, 26%. 26% might not sound like a lot, but that's the S&P 500. This is trillions of dollars worth of money. So if you look at a 26% jump, for example, with Bitcoin, Bitcoin goes up like 100 to 200%. Watch my other videos. You'll have a better grasp of what I'm explaining. But I took this same chart and I actually put it on Ethereum. So I put it on exactly Ethereum. Now, what are we looking for? I'm looking for, and this is the Bitcoin halving. Please, please, please try to be up to date with my videos. If you're new here, go watch the other ones. Try to watch the last 5 to 10 videos. It will show you everything you need to know, all the explanations, you know, the Bitcoin halving as well. I'm not going to re-explain the Bitcoin halving, but this event, just for, you know, simplicity's sake, I believe it's going to bring the market into a full-on bull run. It does it every single time. The entire market goes crazy. It goes up. It's a parabolic move. All asset prices go bullish. So what I did is I actually took today's date or today's price, and I went to the next potential Bitcoin halving. And you can see we have about 189 days. So I went to the last one. I'm like, okay, what were interest rates? What was happening, you know, the last Bitcoin's, you know, halving cycle? So I did the same thing. And we have a period here where what did they do? They printed money, very lightly printed money. The darker the color is, the more aggressive they were. So this was a very light printing of money. Then they kept it the same, right? And then they printed all out like crazy. So if you guys know, my indicator for the market falling is the reds. When they print money throughout history, I've talked about it in multiple videos. When they print money, the market typically falls. That's typically the panic event that makes everything fall. That is my indicator to sell. People are asking me, what's your indicator to sell? Like, where's your price target? I don't care about price targets. I don't care about price targets for my altcoin buy. I don't care about price targets for Bitcoin. The only thing I care about is, are they going to print? I'm going to watch the FOMC meetings, and if they print, I'm going to sell. And I'm going to short the market. Because every time they print, that's always a sign for the market to fall. But if you look at this time period before the Bitcoin halving, you could see that when they did nothing, the yellow, when they did nothing, Ethereum rose by 137%. So this is bullish, right? This is a bullish situation here. When they did nothing, which is similar to what I think is going to happen now, I think they're going to do nothing for an extended period of time. They're either going to do nothing or they're going to increase interest rates. Inflation just came in at higher numbers like a month ago. Inflation is still going up. So if inflation's going up, they're either going to keep it the same or they're going to increase interest rates. They're not going to print yet. Doesn't make any sense. Why would they print? It defeats the whole purpose of their entire goal is to lower inflation. So there's literally I don't believe there's no way they're going to see any printing until 1, there's a panic event and something breaks, or 2, inflation decreases enough. So that's the first situation I wanted to show you guys. Now, if we just go a little bit before that, in this situation, I just wanted to show this went up by 121%. So it's not exactly around the Bitcoin halving where we're at right now, but it's in a similar situation. So we have a bull little cycle here. Now we have a drop in price here as well in Ethereum. But remember, I told you, if there's printing, I'm selling. So in this situation, the indicator I'm using worked. As soon as they started printing, I would have sold this. I would have shorted it too. I would have sold it and shorted it, and that would have been a 56% profit. I would probably use 2x leverage. I would have made 100% return on that. If I use this indicator is very accurate, especially around the times of the Bitcoin halving, and especially for interest rates. Now, if we go back even further, and we look at this time period, this is another Bitcoin halving for Ethereum's price. This is the other Bitcoin halving. You can see pretty much the same thing happened. They were doing nothing. And the price went up 1,189%. So again, just another situation that confirms what I've been telling you guys. But the problem with this situation, the problem with what I'm showing you right now is that the actual interest rates around these time periods were not similar to what the interest rates are now. Right now, the interest rates are about 5, 5.25, 5.5. I forgot exactly what it was. Right now, we're in the 5s, okay? Around these time periods, it was in the 2s. So it's not similar. It's not similar, and I don't believe it's a good way to justify the bullish nature of the market. So I went a little bit deeper. I was like, okay, let's find a period in time where interest rates were at 5%. Let's find a period in time where interest rates were at 5%. What happened to risk on assets then? When interest rates were at 5% and they did nothing, that's what I really want to show you guys. So the exact scenario I'm looking for is when they increased interest rates for a long period of time, green, 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 right? Then they did nothing. And when they did nothing, the interest rates were at 5%. So they went from, I'm looking for a scenario when they went from like 0 and they increase, and then they stayed stagnant for an extended period of time. That is what I'm looking for. And there's only been a couple of times since 2000, since the internet was out, since, you know, everything on the internet's relevant, right? So I'm not going to look in 1925. It doesn't make sense. I'm looking for recent data. So I looked from 2000, right? The original chart for the S&P 500 that I've color coded here was from the year 2000. So I look back, I'm like, okay, when do we have another period like that? And I actually have all of the data, and I want to show you guys the data. I have all the data. I give it to people on CoinPix Inner Circle. But the only other period of time we've had this was in 2006, 2007. And this is where they were increasing interest rates, as you can see right here, and then it remained at 5% for a long period of time. That's the closest thing we have to what we're currently experiencing right now, which is funny, again, because 2008 is when the housing market crash happened. And I do believe a big crash is coming because we are living in very weird times when it comes to the entire market, right? It's very weird times. Like it's a Ponzi scheme. It's a modern day Ponzi scheme. It doesn't work. But when we have crashes, the entire market kind of like recalibrates. And 2008 housing market crash, it's just very similar. It's extremely similar. So if we go back to the S&P 500, that's this period right here, which lines up pretty good, right? This lines up pretty good right here. Let me show you, for example. We have a period of increased interest rates, which is the exact opposite of printing. Increase, increase, increase. They're making it harder to borrow, making it harder to borrow, making it harder to borrow. And then we have a stagnant period right here where they did nothing. They kept it at 5%. So right here, they kept it at 5%. Look, right here, they increase, increase, increase. And then they kept it remained at 5%. They just kept it there. They kept it there for a long period of time. So that is the most similar event I could find to what we're currently going through right now. I believe this is the best time period to watch. And what did I do? Around that time period, Bitcoin wasn't out. Okay, it was about to come out, but it wasn't out. So I looked on risk on assets that have similar characteristics to Bitcoin, Ethereum, and altcoins. And what I've come to conclusion on is very startling, guys. It is very bullish. Let me just give you the hint. It is very bullish. But if you just look simply at the S&P 500, the market goes up by 24%. For Bitcoin's price, that's like a 200 to 300% return. Bitcoin will go up 300% in this type of environment if the S&P 500 goes up 25%. Maybe like 100%, 100 to 200%. You can't really give exact numbers. But what I'm saying is Bitcoin will go up by a lot. That's what I'm trying to explain to you. And the altcoin I picked will go up by even more. If Bitcoin goes up by 200%, the altcoin I picked is going up by 2,000%, maybe 1,000, 2,000%. So these returns are pretty substantial. I'm not playing small ball here. Like I'm not trying to scalp. Like this is a great move. This is a really good move, right? And that's the S&P 500. If you're not convinced, okay, S&P 500 is an index. It's too big. Let's look at smaller assets. So I'm going to pop open this chart here, and I have a couple of companies around that time period that I would say qualify to similar, not the exact same, but similar to Bitcoin and cryptocurrencies. The first one I want to go into is Microsoft. So if we go to Microsoft and we look around this period, remember, this is the period to watch. Let me just put an actual arrow so we keep our eyes on this period. This yellow period right here is a period to watch. So if we look around this time period, I want you to see that it really just made the local bottom, like almost on the head. If you look on the left-hand side, you see that little white moving, vertical line right there. It signaled the exact local bottom and then went for a 71% rally. I want you guys to understand that there was more money in Microsoft than there is in Bitcoin, 100%. Microsoft is a way bigger company. It has a lot bigger market cap. And it went up 71%. I'm saying for Bitcoin's price, Bitcoin probably would have went up like 150%. So that's company number one. Let's look at Intel around this. And this is around the dot-com boom, which is very similar to what we're going to right now. So Intel is INTC. And we have pretty much an identical situation, guys. Identical. Intel bottomed out at a local bottom and then went for a 62% rally. Like, that's crazy to me. That's crazy to me. That blows my mind how accurate that is. Now let's look at Apple around the same situation. Okay, let's go back a little bit. I don't have a chart for this one, but let's go around that time period right here. right here. Apple makes a local bottom. Look at the data. Look, it's right in front of your face. Apple makes a local bottom and then goes on a run. The same exact thing. It blew my mind. When I saw this data, I was like, what the heck? This is crazy. So it goes on a 145% run. 145% run. I'm going to try to explain it to you guys again at the end of this, but I just want to hit you with a little bit more, right? So if we go to Amazon tech company, similar characteristics, risk on asset, not exactly the same, but it's good to look at. Again, another local bottom, and then it goes for a run for 233%. For 232, you think I'm not joking with you guys. I'm not making this up. Let's go to Netflix. Trying to help people, man. It gets crazy out here in the markets. There's a lot of nonsense out there. You know, be careful with who you listen to. I think Netflix was the only one that didn't do anything. Now, there's more companies, and I'm sure I'll perfect this, and I'll give you guys more data. Yeah, Netflix didn't do anything. See, I'm not just giving positive, bullish situation. It actually went down, or like stayed the same, 5% increase, decrease, whatever you want to call it. So Netflix didn't do anything. Let's look at Google. So if we go to Google, and I'm going to give you more data. Google is Alphabet. So if we go to Google, Google went up 96%. I'm going to give you the last one, okay, which is gold, all right? And I'm going to top it off with this, and this should give you some confidence. So we know right now we're in preparation for a spot Bitcoin ETF, right? There's a spot Bitcoin ETF about to come out potentially in October. We don't know for sure, but we know that BlackRock filed, and we know that there's only been one time out of like 50, 60 different times where they've ever been denied for an ETF. Let me say it again. BlackRock has only been denied for an ETF one time in their entire history. They control the world's finances, a lot of people believe, and they are applying for a Bitcoin spot ETF. The important part about a spot ETF is that in a spot ETF, it's essentially giving access to a whole bunch of people that don't have access to cryptocurrencies. Imagine your investment retirement portfolio. Imagine you have like $1 million, $2 million in your investment retirement portfolio, and you're looking at NVIDIA, and you're looking at all your stocks, and you're looking at your housing in one central location. And then now, boom, Bitcoin pops up, and you can add Bitcoin to your portfolio with one click, and making it super easy. It gives it so much credibility, extreme amounts of credibility. And it just makes the average rich investor that just didn't want to invest in risky assets, it gives them access to it. That's the first thing. The second thing is with a spot ETF, it takes Bitcoin off the market. What does that mean? It basically means that they have to buy Bitcoin. And you're probably wondering, why is that important? What does that have to do with anything? Well, they're taking Bitcoin off the market, and the whole entire value proposition of Bitcoin is this scarcity element. It has a scarcity element to where there's not enough Bitcoin. There's only 21 million in existence, and there's 60 million millionaires in the world. So it has this scarcity element. It's the number one reason why Bitcoin's price goes up is because of the simple fact that it has this scarcity element built in, and there's just supply shocks. There's these crazy supply shocks, and it sends Bitcoin's price up a lot. That's what the Bitcoin halving is. So the ETF is very important. Now, if you look at gold, let's look at the actual date when gold had its first ETF. So the same exact benefits, right? Gold is the most similar thing I can come up with when it comes to specifically, Bitcoin, right? Bitcoin's considered digital gold. So March 28th, 2003. So if we look at March 28th, 2003, and look at gold's price, it went ballistic, right? 2003 is like right here, right? Literally started like the bull run for gold. You know what the interesting part about all of that is? That happens to be around the same exact period where we have interest rates at 5%, right? So look at this right here. Let's look at that period. Right here to right here, the same period we keep talking about. We have gold go up 33%, right? With the ETF behind it and everything. Very similar situation. Digital gold, regular gold, right? Not only that, but I'm going to blow your mind a little bit more. Remember, the pink is when they print money. When they start printing money, panic event, they print money, The entire market fall. Look how bad that was. That was pretty bad. Look at gold's price. Gold went up even more, another 20 something percent, and then continued to even go higher. So the point I'm trying to make here is that Bitcoin can have those same properties. I don't think it is just yet, but there is a chance where people are fleeing to Bitcoin. And the reason why I say that is because we just had a banking crisis. If you guys have been keeping up, Silicon Valley Bank went down, which is funny because it's a cryptocurrency style bank, not exactly, but there's a lot of risk on assets and a lot of crypto companies in Silicon Valley Bank. They went bankrupt, and they caused a lot of other banks to have issues and go bankrupt as well. And it was basically considered a banking crisis. And in the banking crisis, Bitcoin went up like 30, 40%. In recent history, guys, this is recent history. It's like less than a year ago. Recent history. If you look at my old videos, I showed proof of this.
A bigger impact this year was the regional bank crisis. It was very interesting to watch Bitcoin go from 19,000 to 30,000 right in the middle of that banking crisis as regional banks were going bankrupt. So it was a flight to safety. So I thought that move was just as interesting.
Hang on, a flight to safety? Is buying Bitcoin somehow a flight to safety? Isn't it a little too volatile for that?
Well, if you think about it, Bitcoin serves as two kinds of hedges. One is a hedge against inflation and outright confiscation of wealth. The other is against counterparty risk. And, when the regional banks started going down, this fear sort of, our memories are fresh with 08, 09, the counterparty risk became real. And so there was this flight into Bitcoin, a completely decentralized, transparent network, which is not subject to counterparty risk.
So long story short, in an environment with 5% interest rates, where the Federal Reserve had just got done increasing interest rates for a year and then doing nothing. They just got done doing it, which is very similar to our current environment. Risk-on assets in the past have shown to all go up by significant percentages. Not only go up, but make local bottoms and go up by a lot. For my investment thesis, my investment narrative, I believe even if it just tests Bitcoin at 30K, that's a 10 to 15% pump. If that pumps 10 to 15%, the altcoin I purchase will pump likely 50 to 100% plus. So if we look at the data, if we look at the history, again, the time to be bearish is when they print money. It's as simple as that. That's the time to be bearish. The time to be bearish is when they print money. The Federal Reserve runs the world. And it's funny because I just want to go on this little rant before I end it. I see a lot of people looking at unemployment. I see a lot of people looking at inflation. I see a lot of people looking at the inverted yield curve. I see a lot of people looking at all these external numbers. And the way I look at it is I'm like, okay, that's great. That's kind of what the Federal Reserve uses to calculate everything. Or do they? You don't know that. That's what people don't know. These guys, they're a private company, meaning they make decisions however they want. They could run a fake Ponzi scheme system. They could run inflation to 25% and just continue running it that way for like as long as they want. They don't have to do anything. They're not part of the government. So when people look at unemployment numbers, they're looking at all these numbers, trying to predict what the Fed's going to do. It's like the Fed could run the Ponzi scheme longer. You don't know that. You don't know. They have control over it. They have control over all of it. So how can you find, the question is, unless you work for the Federal Reserve, how do you know what the Federal Reserve is going to do? How do you know what metrics they're looking at? You can't look at the GDP. You can't look at any other indicator except for the system, the point of contact. And the point of contact is the Federal Reserve. They make the moves. They make the moves, regardless if the system looks broken, regardless if it is broken, regardless if it's fixed, regardless if it's good or not, or bad or not, regardless if there's war. It does not matter what goes on in external if you have this central point of contact where they control the entire supply. They could do whatever they want. They can react to the news or not react to the news. They can react to inflation or not react to inflation. They can react to unemployment or not react to unemployment. So I believe that if you look at all the indicators, I think it's good for like news purposes. I think they're good to look at. I think it gives you some insight and different perspectives, but I don't think for research purposes, it's productive I think it's smarter if you dive deeper into the point of contact. And that's what I've been showing you guys on my channel. So again, if you haven't already, subscribe to the channel. I'm diving extremely deep into this one point of contact, which I believe is the most important variable for any longer term investment trading strategy for everyone. Stock market, cryptocurrency, it doesn't matter. And as you can see, I've been giving you consistent insight through the board, and I've been making investment decisions, showing you guys risk management, giving you the whole 360 perspective. So if you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you in the next video. And this video is brought to you by CoinPix Inner Circle, the most extensive college-level crypto education program ever created. Get private live Q&As with me going over every crypto topic. You can ask me direct questions about anything and get live customized coaching. Get access to a 10-week college-level crypto trading and investing education. This is all 8 years of my cryptocurrency experience packed into one course. Dive into 200+ recorded videos, 100+ hours of content, and 8 years of experience of me trading and making mistakes that you don't have to. This is not theory. This is time-tested and battle-proven over multiple bear markets and bull markets and multiple 100x coin opportunities that have been called in this group. Get access to an elite crypto circle of 7- and 8-figure earners that are all focused on cryptocurrency success. There's also a revolutionary gamification ranking system. As you get likes in the community, you rank up and get reputation in the community. CoinPix Inner Circle has thousands of validated testimonials that you can see for yourself on the website of 6-figure, 7-figure, and 8-figure earners. Head on over to coinpixinnercircle.com to get access to everything. There will be a link in the description or pinned comment below this video.